Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 22nd, 2021. Let's look at TTM Squeeze. I love TTM Squeeze Indicator because it tells you when a stock is going to go out of its trading range higher or lower very quickly. It's a it's an indicator developed by John Carter. It's pretty effective. So today we look at stocks that are going to go higher so we can do a long play or we can buy the stocks. So with that, let's look at market update and look at TTM squeeze indicator where where the stocks have got volume greater than 1 million shares and low RSI. Volume greater than 1 million tells you these are liquid stocks you can trade in and out, and low RSI means stocks are pulled back hard and they can go higher. And we'll also look at few stocks where there is a high short ratio, and we also have a TTM squeeze indicator. These stocks have to move, they have to move quickly. So with that, let's jump in and get started. From a market update perspective, as you can see here, on Friday, this is a one-day chart. Dow Jones Industrial Average came down hard, 268 points down. On the other hand, Nasdaq did pretty okay, up 63 points. S&P 500 also dropped a little bit. As you can see here, the Dow Jones Industrial Average is weaker compared to Nasdaq and S&P 500 on last Friday. And as you scan through here, we got few news items. Jeremy Siegel is warning, market is one bad inflation report away from correction. We have to be a little careful here. So if Feds think inflation is too high, they can raise the rate, and that can promptly cause a correction like we have seen back in 2018 or so. And we got here China. China is punishing Alibaba, Tencent, Baidu, JD, and few more companies on antitrust violations. It may be okay to slowly look into stocks like Baba here, which is a great stock. Has been going down since Chinese government is not really fond of stocks like Alibaba. I think they want to do some wealth distribution. That's what's going on. Some of these companies are really punished very hard. And then you got Qualcomm. Qualcomm is a great stock here. CEO sees the growth beyond Apple. Apple always is in crosshairs with Qualcomm. Now Qualcomm is looking beyond Apple. That's always a good sign for Qualcomm. And also we have got supply chain problems showing the signs of easing. That's the great news. There are a lot of companies when they reported earnings, they cited supply chain shortage. If we can have this situation under control, that's going to help a lot of these companies. And home prices are surging, and the manufactured housing industry sees an opening because it's pretty easy to manufacture it in the factory and then assemble it quickly. So with that, let's jump in here and get a quick market update from TD Ameritrade or Thinkorswim. So as you look through here, we got futures here. We got S&P 500 futures here, up 14 points today, pre-market. As you look here, we got nice uptick here. So S&P 500 is almost at the top here. We got to be selective and buy some great stocks. It's in a bull market right now. We'll see how it goes. And we got Nasdaq here. Nasdaq is a little more stronger than S&P 500. As you see here, S&P 500 is hugging the 10-day moving average, actually 25-day moving average here, whereas Nasdaq is well ahead of its moving average, which is a 10-day moving average, as you can see here. So Nasdaq is a little more stronger than S&P 500. And then we got Dow Jones Industrial Average, which is a little bit weaker, as you can see here. It's trying to make a small uptick here, up 95 points in the futures market, but it's a little bit weaker. It came below its, let's see here, it came below its 25-day moving average a little bit. It's trying to bounce off from there. We'll see how it goes. It's a little bit weaker compared to S&P 500 and Nasdaq. And Russell is also, along with the Dow Jones Industrial Average, a little bit weaker. This also came below its 25-day moving average. Now it's trying to bounce off of its 25-day moving average. So with that, I think in these two, Dow Jones Industrial Average and Russell, you can get some good stocks at a discount here, given these are a little bit lower compared to S&P 500 and Nasdaq. So with that, let's look at the bond market here, see what bonds are telling us. So from a bond market perspective, as you can look through here, we got bonds a little bit down here. As you can see here, 19 ticks down here. And the interest rates, 10-year interest rates are also, I think it's zero right now. It's trying to decide where to go here. I think this is going to help the stock market a little bit. Stock market likes when interest rates are a little bit lower. Right now, interest rates are unchanged. So with that, crude oil is coming down. There's always a good news. With the crude oil coming down, I think it can help many of these stocks. And we got gold. Gold is also coming down a little bit. That tells you risk is off. A lot of people, they want to look at gold when there's a risk in the market. Right now, gold is coming down, means folks are swapping away, from defensive stocks like gold into stock market slowly. That's always a good sign. So with that, let's jump in here and look at TTM Squeeze Indicator and go from there. You might wonder, what is TTM Squeeze Indicator? What's the big deal about this one? So as you look through here, I got a TTM Squeeze Indicator chart here. We got a 1-day chart here, and we got a 3-day, 2-year chart, and a 5-day weekly chart, and a 10-day monthly chart. I like to look at multiple time frames. That tells you a good idea where is the stock coming from, where it's going. As you can see here, by looking at cliff here, CLF, it's a little bit dated. I want to show it for illustration here. Cliff on a 1-year basis, you feel like stock is doing great. As you look through a 2-year chart here, you feel like okay, stock is not at its top. It's trying to make some higher highs. But as you look at 10-year monthly chart here, it's nowhere near its all-time high. It's trying to take back some of its glory days here, trying to go higher. It gives you a good time context here. By looking at multiple time frames, you know where the stock is coming from, where it's going. Just by looking at 1 year, 1 day, you would not know the stock has made so much high here, $91, and now it's struggling to make a high in 1 year. So you get that context by looking at multi-time frame here. That's what I like about multi-time frame. And you might wonder, what is this TTM squeeze? So all you have to do is you have to add few of these lower charts to your TTM, your Thinkorswim. You can look at one of my previous videos where I talk about how to set up these charts, and you can get yourself familiarized. As you look through here, all you have to do is keep watching for a red dot, somewhere towards the end of the chart here. The moment you see the red dot here, that tells you there's a volatility compression. Bollinger Band is inside the Curtain channel. This cannot stay like this for a long time. When there is a volatility compression, energy has to be released. It has to go higher or lower. And as you look through here, the first green dot after a series of red dot, that tells you, the energy is ready to be released. So it's always good to know when the energy is going to be released. That's your trigger here. The first green dot here that tells you energy is about to be released. Then you have to look at longer term C wave here. When you see a first green dot, if the longer term C wave, if it is above the zero line, the line here is the zero line. If the longer term C wave is above zero line, like the one you see right now, that tells you energy is going to be released on the higher side, meaning stock is going to go higher. That's when you buy the stock outright, or you can buy a call option, delta 70 or higher, maybe 90 days are out. So that's what you do. The moment you see a green dot after a series of red dot, check the long-term C wave. If it is above zero, then you can go buy stock, or you can buy call option. On the other hand, if the long-term C wave is below zero line here, that means it's negative. You could go short, or you could buy some put option and expect stock to go lower. That's the beauty of this indicator. It tries to summarize this whole thing and let you know whether the stock is going to go higher or lower. And I like to look at multiple time frame. If you see here on the 3-day chart here, we got series of red dots here, and when the red dots are forming, longer term C wave is above the zero line. That tells you coast is clear. So you got the coast clear in the 1-day chart, you got coast clear on a 3-day chart, and as you look through here on a 5-day weekly chart, you got here coast clear, longer term C wave is above zero. So when this happens in the multiple time frames, you get a good signal that tells you, hey, you know what, this is a great buying opportunity here, and you could execute and take it from there. So that's in a nutshell, what is TTM squeeze. And you can also look at the bar here. In the shorter term A wave, the yellow bar means bullish, red bar means bearish. In the longer term C wave, when the lines are above zero, the light blue means bullish, dark blue means bearish. So that's the quick cheat sheet for you on TTM squeeze and TTM wave from John Carter. And now we'll jump in and look at few stocks and see what we can buy. So as you look through here, we will look at stocks with a TTM squeeze indication, volume greater than 1 million shares. We want these stocks to be very, very liquid and highest volume on top. So that way we look at liquid stocks first. Low RSI means stock is pulled back in last 14 days or so. And it's good to buy when the stocks are pulled back. And low volatility, typically when the volatility is low, we call it volatility compression, and that can typically lead the stock higher. And we'll also look at stocks breaking out of trading range, which is the essence of TTM squeeze indicator. So with that, let's jump in and look at few stocks here. Top of the list, we got Cisco Systems here. Cisco Systems is a networking kingpin. They also have WebEx, and they got some security product here, which is a top notch here. After the earnings announcement, promptly Cisco stock came down, as you can see here. It's down in 1 day, 5 day, 10 day, and so on and so forth. And in 1 year, they've done 33% and nice 107% in 5 years. And this company also has a nice dividend. So with that, I think it could be a good idea to look at Cisco Systems and see if it's worth buying at these levels. And then you got a few more here. We got Dow here. Dow is also at it's at around $57. Nice sales growth, nice gross margin. Company makes money just like Cisco. Net margin positive. As you look through here, RSI is low 47 here, and as you scan through, stock has pulled back pretty hard in last 1 day all the way to 6 months, and it's done about 8%. And look here, we got a TTM squeeze in 3-day here, and in Cisco there is a weekly squeeze. So we need to look at these type of candidates here and then go from there. And as you look through here, also look at how the stock is doing in 1 day, 5 day. That tells you if the stock is going to go higher. For example, Norton Life Lock here, trying to make a move higher in 1 day. That tells you stock had enough downtime here. It's resisting. It's trying to go higher. Same story. Keep watching here. We got few more stocks here trying to make an uptick in 1 month. We got Berry here, CDE. And I think those are trying to make some move here. And we also have a few more here. We got AKBA Therapeutics, little company with the just $2.78 stock here. Very low market cap, nice gross margin here. Top line growth is not there yet, but look here, it's trying to turn around here. And we got CGSP CoStar, same story, trying to turn around. And we got two more here, QSR, which is restaurant chain with Burger King and a couple others. It's also trying to turn around, as you can see here. And we got last but not least, Air Product Partners, which is one of my favorites. It's also trying to turn around. And also notice we got few companies, at least one company here, Fastly. Nice short ratio here. This is where we got TTM squeeze here on a weekly basis, and we also have a nice short ratio. That's where TTM squeeze meets the short ratio, and Fastly need to go higher or lower quickly. We'll see what direction it will go. So with that, what we'll do is we'll jump in and look at Thinkorswim platform and look at some of these indicators. So with that, what I will bring up is I'll bring up a quick chart here, and let's look at TTM squeeze chart. And also let's make sure we have one more chart to for we can look at and go from there. I think we are good here. First we look at Cisco here, Cisco Systems, networking kingpin here. As you look through Cisco here on a chart basis here, we had the earnings announcement. As you can see here, stock came down big time. And as you scan through here, RSI is lower here. I love to look at these type of chart here. This is one of my favorite, chart setting. Gives me a good idea in one nutshell here. As you can see here, I can also make it a little bigger so you can see it clearly. Cisco came down big time after the earnings announcement here. RSI is a little bit weaker here. That tells you momentum is down right now. It's trying to stabilize, as you can see here. And as you look at the implied volatility here, implied vol came down big time. IV percentile is 29% here. If you're a long-term, call option buyer, you could buy Cisco call option, maybe say 90 days out or 1 year out with a low premium here. You don't need to pay too much premium given IV percentile is low. Look, we got the implied volatility dropping off here. That's when you buy call options. And we got volume average right now with this whole big drop off in Cisco after the earnings. On the balance, volume is pointing to lower. That tells you right now there's a selling pressure. Volume is high. When the stock is down, that means this line on the balance volume will come down. So that tells you more selling than buying. Which is okay. When the stock drops a big time like this happens. The on the balance volume generally comes down. On the other hand, check-in money flow, which is a smart money flow indicator, that's telling you, money is flowing into the stock. That's a good sign. That's why I like to buy Cisco. At these type of times, I've seen Cisco many times. Look here, earnings, stock came down, good buying opportunity, went up, and earnings, stock kind of traded sideways, then went up. One more earning, stock went higher. And typically, when Cisco drops after the earnings like this, it's a good time to buy Cisco at the time and then go from there. Next, we'll bring up a TTM squeeze chart here and look at the TTM squeeze chart. As you look through here, we got Cisco in a one-day chart dropping off big time. Ouch, that must be hurting. And as you scan through here, keep watching for dots here. We have a weekly chart here. In the weekly chart, we got a dot, red dot. That tells you at this time, there is a high, the compression of volatility. Right now, Bollinger Band is within the curtain channel. The volatility is compressed. Stock has to go higher or lower. To find out where the stock might go, you got to look at TTM wave here. What John Carter tells you is really when the TTM wave, long-term C wave, that's this one right here, if it is above the zero line, then the coast is clear. You can go buy the stock or you can buy the call option. So with that, even though the wave is kind of dropped off here and stabilizing, because it's above zero here, you could buy some Cisco at these levels and go from there. So what I will do now, and you can also look at longer term monthly chart here. In the monthly chart also, Cisco is nicely above the zero line here. That tells you coast is clear even on the monthly chart. So with that, we can go to option chain here and see what we can do with Cisco here. As you look through, we got Cisco Systems here. Stock price is 53, all-time high is 60 here. And as you scan through here, this also pays a good dividend here, 2.78% yield. If you're a retiree or if you want some nice dividend income, you could buy Cisco at this time here and sock it away. This will make your portfolio much better. One of the low risk type stock with nice dividend, also some growth here. So with that, as you look through here, we got Cisco. I would say if you want to buy stock here, buy right now. I mean, no big deal. Stock is down here after the earnings. If you want to do options play here, you could go maybe say 18 March, or you can even go higher if you're a long-term person, and you can click on 18 March here and bring up the option chain. So stock is at 53 here, and what you could do is you could buy say 45 or 50. Keep watching the delta 70 here. I think there is no delta 70. you could probably buy, say, delta 86 here, or even delta 66 is okay here. You could just buy this here and go from there. You're paying here $4.85 here, and if I confirm and send here, you're buying one Cisco expiring in 18th of March, 116 days out here, and you're paying 485, and your profit potential is infinite. As stock goes up by $1, your option goes up by 66 cents. That's what delta indicates, and this is a good play here. You could just buy and take it from there. And for some of you, if you don't want to buy single leg here, or if you want to be a little more conservative, you could do a spread here. With the spread stock being at 53, you could probably do, say, uh, you could do 45 to 55 spread here. That's one way to play here. So you could do 45 and 55 here. There you go. It's a little bit conservative play here. You're paying $6.54 here, and if you confirm and send here, you're paying 654 to make 346. Not a great risk reward here, but look, your break-even point comes down here to below the current stock price. This is one way to play. But what I would recommend probably is, don't, this is risk reward is not great here. We can ignore this one for now. You'd rather go to 50-60 here. So this is a better bet here. Let's delete this. 50-60 is a better bet here. So let's do that. So as you look through here, we are buying the 50 and we are selling the 60. So it's a $10 wide spread, as you can see here. So as you see here, let's confirm and send. This is a better risk reward ratio here. So you're paying here $406 and you're making $594. You're more than doubling your money here, but your break-even point is a little higher than the current stock price. That's why it's not very conservative, but it's a better play. So with that, you could buy this here, a spread play here. I think this will do well. So with that, what we'll do is we'll look at one or two more and go from there. Next stock we'll look at is NLock, Norton LifeLock here. It's a consumer, security play. So as you see here, Norton LifeLock stock is kind of trying to decide where to go. And as you see here, the RSI is in the middle of the range here, trying to stabilize. As you can see here, implied vol is low. That's what I like. Whenever I look at the TTM Squeeze Indicator, I like when the volatility is low, just like we see it right here. And from a DMI chart perspective, right now it's negative with the red line on top, blue line on the bottom. On the volume average is telling you, on the balance volume is telling you, right now, it's more selling than buying. That's why the line is kind of, going a little bit lower, but not too much lower. On the other hand, check-in money flow is pretty stable here. Money is flowing into the stock. Right now, it's a little bit down tick or stabilizing, but generally it's a positive sign. So with that, let's jump in and look at TTM Squeeze Indicator and see what we see. As you look through here, we got 1-day chart, 3-day chart, 5-day chart, and a monthly chart here. Look, we got a dot forming here, red dot. When the red dot is forming, the longer term C wave is above 0. So that's a good sign here because it's above 0. But the trend itself is a little bit down, as you can see here. So that's why it's not it's not one of those coast clear jump in type deal here. You should be a little more careful, do a little more due diligence here. And as you look through here, we got a dot forming in a weekly chart, as you can see here. And when that's forming, longer term C wave is above 0. This is when you get one more confirmation here. Even though in 1-day chart, it's above 0, it's kind of dropping off here. In we got one more indication here on the weekly chart. It's above 0, even though it's a little bit going lower, but still above 0. And if you look at the monthly chart here, the bars are solidly above 0 here. That tells you long term the coast is clear. Typically you got to trade in the long term direction here. That's why you can go in here and buy some Norton LifeLock here, NLock here. Given it's above zero in 1 day, above zero, C wave is above zero in weekly chart, and strongly above zero in a monthly chart. With that, coast is clear. You could buy some Norton LifeLock and go from there. So as you look through here, let's go to option chain here. Norton LifeLock, $25 stock here. All-time high is 29, as you can see here. And as you look through here, we got VIVO is 24. It tells you stock might come down to a tad lower here to 24 or 0.84 here, but it's okay to initiate a good position here. So with that, I would go maybe for 143 days out here. You could even go longer, and you could look at delta 70. I think delta 68 is good enough. You could just buy this call option here. You buy Norton LifeLock, expiring on 14th April. Confirm and send. So as you can see here, you're paying $310, and your profit potential is infinite as stocks goes higher. Your break-even point is 26, which is just $1 or so higher than the current stock price. And every dollar stock goes higher, your call option will go up by 68 cents. That's indicated by delta here. You could confirm and send. It's a little bit lower price stock and go from there. But some of you don't want to buy one leg option here. You want to buy a spread. Stock being at 25, you could do 20-30 spread. That's a good play here. You could buy 20, sell 30. So that way it's a good play. Let's do that. So if you say you're buying a call option 20 strike price, you're selling call option 30 strike price here, you're paying $4.95 here, and as you see here, your your break-even point came below the stock price. That's why it's a conservative strategy here. You're paying $4.95 to make $5.05. You're doubling your money here. So your max profit is capped at $5.05. With the spread trading, always your max profit is capped because you do both sides of the leg here, but it's a little more conservative because your break-even point is below the current stock price. That's why it's conservative. So with that, we could confirm and send this. It's a good play here and go from there. And next we look at maybe one more here and go from there. So we look at APP, Digital Turbine, one of my favorite stock here. Let's look at APP. APPS. So Digital Turbine is one of my favorite stock. I like to trade this often. As you see here, stock is a little bit lower right now, pulled back pretty hard. If you look at the RSI here, RSI is also dropping off a little bit. Tells you momentum right now is not strong. It's a little bit lower. And if you look at the implied volatility is very low here, pretty flattish as you can see here. That tells you if you buy call option longer term, you're not paying too much money. That's when I like to initiate these type of trades. As you look through from a DMI chart perspective, the blue line is lower, red line is higher, distance is significant. That tells you right now it's a bearish bias here because red line is on top, it's bearish. And from on the balance volume perspective, it tells you there are more people buying the stock than selling the stock. That's why it's pretty stable here. So that's when I like to buy some of these stocks here. Check-in money flow is lower here. That tells you smart money is flowing out of the stock. But in here on the balance volume is telling us other way. This is a good setup. Let's look at TTM Squeeze chart here and go from there. From a TTM Squeeze chart perspective, keep watching here. Looks like the dots have changed right now. So here we got a dot here in the weekly chart here, and we already have the squeeze forming here. And see here we got some nice blue lines here. So right now squeeze has already fired here, and there's no other squeeze forming here. So with that, it's not a squeeze play. Nonetheless, I like this stock here at these levels, and we could see what we can do here. So with that, let's jump in here and look at the option chain here. Apps, Digital Turbine stock is at $60. All-time high is 102 here, almost double of the current price here. You could go 116 days out. You could buy the stock outright here. It's a great stock to buy here. Or you could go into option chain here. Look at delta 70 or so. 68 is good enough. You could buy this here and confirm and send. As you can see here, you're paying $1,200, and your break-even point is 67, which is $7 above the current stock price here. And as you see here, for every dollar stock goes up by, your call option will go up by 68 cents, indicated by delta. And some folks, I understand you're a little bit concerned here because your break-even point is higher, $7 higher than the current stock price. In those situations, what I would recommend is go for a spread trading here. That way you don't need to worry about high break-even point. So if you do a spread trading here, given the stock is at 60 here, you could nicely do a 55-65 spread. So you could do here 65 and buy this spread here. There you go. This is a conservative strategy. You're paying $4.50 here. It's a $10 wide spread. Remaining $5.50 is your profit potential. That's why it's more than double your money type proposition here. Look, as you watch here, keep watching your break-even point here. That's the beauty of spread trading here. It will bring your break-even price lower. Current stock price $60.64. Your break-even is 59.50, and your max loss is 450, but your max profit is 550. You're more than doubling your money here. So with that, is a conservative play. You could go with this and take it from there. So with that, you could look at other stocks here in this list here. Look, we got all these stocks here. Focus on the stocks where there's a nice sales growth and gross margin. These companies are making money, and many of these stocks have got nice net margin, meaning they're not loss-making companies, they're profitable companies. I would go after these companies where there's a nice quarter-over-quarter sales growth and nice gross margin, net margin, low RSI. All these stocks are low RSI, and stick with those. So with that, thank you very much. Please subscribe.